Securities offered by MoneyBlock. Here to take a look at what's going on in the midday right before the FOMC, the Federal Open Market Committee, is going to be coming out with their decision. First of all, to raise rates, and they're going to give us some perspective on what their future rate implications could be going into 2017. Welcome, everybody. Taking a look at the markets right now, there's mixed action. Most of the indices are in the red. You have the only one in the green being the NASDAQ, up about 0.1%. The S&Ps are down 0.1%, and you have the Russell 2000 being the biggest laggard today going into the FOMC decision, down 0.8%. And you know what, just to be fair here, it's normal that the markets, first of all, are taking a pause at this juncture. We've had a huge run over the last month and a half. Secondly, you have the last and largest announcement that we've had so far this week as far as the FOMC meeting, which there is a certainty with a probability of about 95, as we discussed, dot plot frequency moving forward. At 8 out of the 11 offensive sectors that I watch are showing some midday losses, just trimming up some profits, maybe some taking off some risk off the table from those that are speculating. The heaviest losses right now are in two sectors: real estate down 0.4% as a sector, and energy down 0.7%. Those are the two that are the biggest laggards. And really right now we see that real estate has been lagging from the get-go. Energy started to pull back when there was pressure in the crude oil complex. Really early in the session, it was down about 1.9% at around $52 a barrel, coming off of those highs that we saw yesterday. The energy sector basically saw a bearish inventory report from the API. The Department of Energy released a bullish inventory report, but the news hasn't done that much for crude oil, in spite of the fact that we did see from the Department of Energy a draw. Now, most of the cyclical sectors are trading closer to their flat lines. You know, technology, again, being the stalwart right now, being the leader, the catalyst. As a whole, the complex is up 0.3%. The NASDAQ futures are up 0.8%. We've had positive showing from Apple up 43 cents, Google up 5.18, and Facebook up 49 cents. So you have basically a 0.4 to 0.6% on the large cap segments. A handful of counter-cyclical sectors have shown some slight relative strength in front of this announcement from the FOMC. Consumer staples up 0.2%, utilities up 0.1%. Telecom services still unchanged. But again, they're trading above where the large cap brethren and broad-based indices are trading. Healthcare, though, is lagging, down 0.2%, and there's weakness in biotech. There has been some headlines that the Department of Justice is going to be coming out with some charges on some of these generic drug makers and some price fixing. There are going to be some key executives that are going to be under some pressure. The drug sector, pharma, is under pressure. IBB is down $1.14 right now, off of its worst levels, down about 0.4%. In the consumer discretionary sector, we're always watching that one, down about 0.1%. It's basically trading in line with the remainder of the market, which we should assume would happen, because nothing much is going to happen until we get the Fed coming out. There was weakness in the automakers, though. Most notably is Ford and GM. GM down 84 cents, Ford down around 7 cents, off of their worst levels, though. But it was based on a news report overnight that China may penalize some unnamed U.S. manufacturers of vehicles for monopolistic behavior. We'll wait and see if that actually plays out. Treasuries are still holding their price gains into the Fed announcement. 10-year has seen the yield fall 4 basis points to 2.43%. We did see that retail sales came out a little bit lower than expected, but still better than they weren't negative. Up about 0.1%. You did see producer price index go up That was unexpected. And you're starting to see that industrial production and business inventories are on the move. Well, the CPI, the Consumer Price Index, which is out tomorrow, is going to be watched very closely, especially after the Fed announcement today. So that's it for strategy now. Right now, we're going to be watching the Fed announcement. We'll be talking about it at 3:30 Eastern time. That will be post the announcement, which is scheduled to come out at 2 o'clock, and then the comments at 2:30 Eastern time. That'll give us plenty to talk about at the 3:30 Eastern time Tech Talk breakout session that we will be having. So join us here at MarketStream.live. Take care and have a great trading day.